growing others, inspiring others, coaching others, and leading each individual to their goals in life. Homeownership is one of the main passionate assets I have and wake up to every single day for every client to accomplish. My success story is about my family. Each day that I wake up and go home to is my children and my husband and my life. We live a life by design, and we live a life of love. Our story is much more than a success story. I am Jackie Stevens with the Stevens Home Team. Doesn't that video get you all the time? Were you able to see it, Ryan?
Yeah, that's a great video. I was just telling Yvette that we need to do something like that.
Well, of course. Yes. I think a lot of people love that. It's, just more like family oriented and so forth, because I think that's where we all come basically from, families or growing families or whatever the case may be. So I'm super excited to have you here, Ryan. I know that this is actually my first podcast for 2024, and we're entering it with you, of course, Ryan, where we go back many, many years, and we've seen streams of ups and downs of the market since back in the day. So the great thing and the positive here is that we made it. So I don't know if you agree with that, is if we've actually made all the roller coaster dips in this whole entire real estate career or mortgage career. So thank you for being here, Ryan. Tell everybody a little bit about yourself. I know I kind of already said that we went back in the day, but just tell us who you are. I know most agents know who you are, but we are going to have home buyers on here, or people asking the genuine questions of how they are going to move forward with 2024 when it comes to investing in real estate.
Well, thank you, Jackie. First and foremost, I want to wish you guys a happy new year. Hope you guys had a great holiday season. Here we are in January 2024. Came by super quick, and we're ready to start the year strong. So thank you for having me on your podcast. I appreciate that. Yes. As you said, we've been working together for over 18 years, maybe. Yes. We've been through all the ups and downs of this crazy market, and we've been successful and we've flourished during those times. So thank God for that. But yeah, I've been a mortgage loan officer going on 23 years now. I started off as a broker, moved to the banker world maybe 12, 13 years ago. It's been really good to me. So you can hear my little baby in the background.
Yes.
But yeah, so I've been doing mortgages for 23 years, like I'm saying, and been successful, very successful, thank God. I've aligned myself with a great company, CMG Home Loans. We offer all the loan programs, DPAs, the 100% FHA. We have non-QM products, bank statement products. You name it, we got it. We're very competitive in our market. We very competitive with rates, with fees. Our underwriting is amazing. Our turn times are excellent. Our closing department is incredible. So yeah, I've really found a home with CMG. I've been to a lot of banks over the last couple of years, and you get to know your competition that way. So that's one of the pluses, right? But yeah, I've landed a spot where I'm very comfortable and I've been very successful. In 2023, which was a down year, did very well. And I know 2024 is going to be an amazing year for a lot of people in the industry.
Wonderful. Okay, you know what? Somebody is commenting no sound. So let me see. It says I'm backstage. Okay, give me a second, guys. Can you guys hear me? Can you guys hear me?
I can hear you.
Yeah, you can hear me. Okay, let's see. Let's figure this out while I get Ryan on here. Let me see.
Oh, there
I know I'm double screen right here, which is good, but I'm on my new iMac or my Mac computer. So again, I don't know if I did my settings correctly, but we're going to figure this out. So give me, okay, Irma says you can hear. So Irma, can you hear both of us? Just give me a thumbs up if you could hear both of us. Yeah? Okay, cool. I don't want you guys to miss the heat, right? The good stuff. And it says that he's backstage, but can you see Ryan? Okay, I can hear both. Thank you, Marisol. Thank you so much.
Thank you, guys.
You Ryan, right? And you can see me. Perfect. Okay, let's rock and roll. I wish
I had
Okay, cool. So we're all good. They can hear both of us. They can see both of us. Now, I know you were, if you didn't hear Ryan, he was saying that he is with CMG Mortgage now. He's been through a couple of mortgage loan
Banks.
companies like I have been. Right. But the great thing about that is that you learn what the companies that you're with, and then you kind of find where your home really is. So, I mean, you grow and you prosper. So the great thing is too, is that you basically experience so much in the industry. And the reason why I've used Ryan for many, many years is, you always need somebody to think outside the box. You always need somebody to look at the whole canvas, right? A lot of the times that I really want to talk about with you, Ryan, is, you know, you could get denied while searching for a home loan at one bank, but then maybe you use another bank for a second opinion. So in with my real estate agents that we teach, is you always get a second opinion, kind of like the doctor, because you can get an approval on something maybe the loan officer didn't see. And Ryan, his strengths are in that. Don't get me wrong, I've tried many loan officers. Some are awesome, some are amazing. But I feel too that Ryan always finds a way to get these clients approved. And so I know you were talking a little bit some lingo language on the lending side, and a lot of consumers aren't going to understand that, Ryan. So can you put it in lingo on when it comes to wanting to own home ownership in 2024, meaning buying a home? What are some steps that you can tell people currently on how to get that process started?
Okay, so the first thing that anybody wants to do if you're interested in purchasing a house is you need to get pre-qualified. Okay, that's going to be the first step for everybody. What does that consist of? Well, teaming up with a real estate professional like yourself and a mortgage loan officer like myself. And you want to do the loan application. With the great technology that we have today, you can do this from the convenience of your cell phone, internet, website at home. It used to be before many years ago, we'd make an appointment with the customer. They'd come in and sit with us for an hour and a half, and we'd ask them all the application questions. We'd type it in for them, and then we would gather their documents. We'd go make copies, and then we'd have a file the size of a book. And that would take about an hour and a half, 2 hours. Now, with all the great technology that we have, it's as easy as logging into your phone, setting up an account, answering some questions, and uploading your documents. Okay. Then the next step would be for someone like myself to go in and pull your credit report. We're going to look at your income. We're going to look at your debts. We're going to look at your credit history. And then we're going to determine if you're approved, if you qualify, and how much you qualify for. Now, if you don't qualify, let's say your credit's not where it needs to be, or your income, or you have too much debt, whatever it may be, then I'm going to review your application. I'm going to put together a game plan for you. And I'm going to tell you, Mr. Customer, if you do A, B, and C, we'll get you to the finish line in 6 months, 12 months. Sometimes you need credit repair. You want to go to a credit repair specialist, which you and I can refer people to, and they'll tell us, hey, Ryan, it's going to take 6 months to get their credit in line. And in that time, we're making sure that we're paying down debt, that we're making payments on time, that we're not opening any new credit lines. So there's a lot that goes into it, but definitely the first step in purchasing a home is going to be get approved. Line yourself up with a professional real estate agent, someone with experience like yourself, Jackie. You've been doing it for very long. You've been a top producer in the city. You've won numerous awards. You know your market well. And someone like myself who's got 23 years of experience, and someone who's an expert at getting people qualified when the other banks have said no. You know firsthand, I've saved many deals for you guys over the years. When other banks said no, I can find a way. Or we can tell you what you need to do. And if you're willing to work with us over the next couple months, then we're going to make you a homeowner this year.
Exactly. And that's what makes it very different, because we need, a lot of people think, oh, I don't qualify now, it's a total bomb, like what am I going to do? But the best thing that I feel that a homeowner can always do, or anybody out there, and I've done this many times with Ryan, is I don't care what anything looks like right now, and we're not going to know maybe your credit isn't as bad as what you think. Maybe it hits that threshold where you're able to qualify, but maybe you need a little bit more money down. Maybe you have that, or maybe we need time to save that. But the great thing with Ryan, and why I work with him a lot, is because a lot of people will just make, they don't qualify, dud, I don't want to take them. No, too much time to waste with them. But here we prepare plans for you. And I think that's so important when it comes to working with a team like that, because that means you have a team that cares, that maybe we don't close in 30 days, but we got you on a plan to close in 6 months or even a year. I had a client that took 3 years to close and or to get into a home, but we worked a lot together. But I don't know if you remember one of those clients, I won't say the name, but it took us 3 years, Ryan, and
Yes.
probably the most amazing story ever. So tell us a little bit about how we can pre-plan for 2024. And I know a lot of people are hearing that the rates dipped. Oh my gosh, everything's chaotic. But what do you tell us a little bit about the rates and where they're going right now for 2024? What can we expect?
Okay, so a couple of weeks ago, maybe 3-4 weeks ago, rates did start to trend downward. Okay, and you're right. You jump on social media, you go online anywhere. Rates are falling. Rates are falling. Buy a house now. Buy a house now. Right. Well, the reality of the situation is, since that dip in rates over the last 3 or 4 weeks, rates have crept back up and they've come back down in small increments. But over time, those small increments add up. Right. But nothing significant to sway somebody from buying a house today or waiting, right? And the truth of the matter is, Jackie, no one can predict the future. We know that 2024, most likely rates are going to come down. It's going to be an election year, and typically that's what happens, right? Politicians are putting their best foot forward, and they're trying to present the economy in the best way and the healthiest way, strongest way to show that rates are coming down, right? But we don't know when that's going to happen, and we don't know how far they're going to come down, right? But they will this year. Now, you want to make sure that you're getting yourself pre-approved, right? And you're making yourself ready to pull the trigger and put an offer on a home when rates are where you want them to be, or when the market is where you want it to be, right? Mm-hmm. But the only way to do that is to get pre-qualified now. Make sure you're on the path. That way you can pull the trigger when you're ready. If you wait for rates to drop and then you want to fill out a loan application and you realize, hey, I got 2 months of work here. I got to pay off some debt. It's going to take me 60 days. I got to work on some of these credit lines. I got to do some credit repair. It's going to take me 6 months. Well, by that time, you've missed the boat, right? Rates have already dipped. The market's become flooded with home buyers that have been waiting over 2 years on the fence to come in and purchase. So now you've got a depleted inventory. And now what's going to happen? This happened 2 years ago. The home prices are skyrocketing. And you can attest to this. People were paying 20, 30K over asking price, over appraised value, right? When also seller contributions are going to come down.
Away. Mm-hmm.
Right? So now you got to deal with the down payment. You've got to deal with closing costs because you're most likely not going to get anything from a seller. And you've got to pay $5,000, $10,000, $15,000 over asking price, right? Our market in El Paso, that's not our typical buyer, right? So it makes it very hard for first-time home buyers to enter the market under those conditions. So do yourself a favor, get pre-qualified now. Ask the questions that you need to ask, get the knowledge that you need. That way, when you're ready, when you find the house that you like, you're ready to pull the trigger. And 0.5 point in interest rate shouldn't be the determining factor. That could equate to one dinner, one fast food meal a month that you may have to sacrifice, right? Yes. Or one dinner at Applebee's that you may have to sacrifice, or that night at Buffalo Wild Wings where you watch the game and drink beers, right? So
that's what I say all the time. I'm like, guys, if you eat 2 or 3 times a month, if you just maybe go 2 times, you're going to save $250, which could be on you, which basically you're paying on your mortgage.
Right. And you're going to save thousands in the house. And you know what a lot of people don't realize is buying a house today, you're kind of locking in the market for yourself. You buy a house today, and whatever happens in the market in the future, it doesn't really matter. If the market goes up and you look to buy a house in 5-10 years, well, guess what? You're a homeowner. your house is increased in value because the market went up. And when you're ready to sell and upgrade, you're going to reap the benefits of that through equity, right? You're going to have more money to put down, pay off debt when you're ready to move to that second home. If you continue to rent right now, you're missing the boat. You're not locking in that equity. And when it comes time to buy, you're going to struggle if you don't have a good amount of money for down payment, closing costs, and any overage that you might have to pay above appraised value.
That makes so much perfect sense. And this is what we are telling our clients today, not only our clients, but our audience, is 2024 is going to be a year of preparation. Prepare yourself. Get that loan application going, and it doesn't matter where it stands. Let's see if your credit is aligned. And then, of course, let's see if your debts are aligned. So again, the bank is going to want to see your credit score. They want to see how responsible you are. And then they're going to want to see your debts. With those two, we need to figure what, bottom line you're at and what max line you're on to shop for. But if it needs some adjustment as far as bringing down those debts, or if it needs adjustment on increasing those points, Ryan and his team will be able to guide you and lead you in that direction. So, income tax is right around the corner. So that could be an option to save for either credit repair or bringing down some debts that Ryan and the team will educate you on, or it could be used for your down payment. But I do want to emphasize that Ryan hit a very good point, and we're all going by it, is if we have low inventory, and that means that we don't have a lot of homes for sale in El Paso, when rates go down, what's going to happen is you're going to get a rush of buyers trying to purchase that same house, which Ryan was explaining. You're going to have to come in with extra to go above that sales price. Then you're going to have to pay your down payment, your closing costs, and all these other, costs that right now people are still giving you closing costs right now. That's what we've been seeing. New home builders are giving you these outrageous incentives, $15,000, $20,000. That goes a long way for Ryan to help you, bring down that rate or pay any. What can they use with those $15,000? For instance, I'm going to give an example. We represent Signature Homes, a very small builder here in El Paso. We're offering up to $15,000 in buyer's concessions, means monies. Where would you put that $15,000?
Well, we can do several things with that money. We can use it towards your down payment. We can use it towards your closing costs. We can use it towards a rate buy down. Okay, so and it really, through the application process, through talking to our customers, we find out what's most important to them, right? You see some builders out there, they're advertising extremely low rates, right? And what they don't tell you is, maybe a builder's giving you 5-6% to buy down the rate, but you still have to come out of pocket for your down payment and your closing costs, right? Well, you may have a buyer that says, I don't need a 5%. I'd rather have a 6% and not pay any closing costs out of my pocket and just the down payment, right? So, or you may have a buyer that says, hey, I don't want to come out of pocket with anything. I want to get down payment assistance. I want the builder's points to cover my closing costs, and anything that's left over, we can apply it to a rate buy down or something like that. So really, through talking with our customers, we find out what their ultimate goal is, and then we can guide them in that direction. Some people say, hey, Ryan, I want the lowest rate I can possibly have, right? And then we can apply those 6 points to the interest rate buy down. And you could be in the 4s and the 5s, depending on your credit scores and depending on your program and down payment. And then, if you say, I don't mind coming out of pocket to pay for my down payment and my closing costs, then what's like, great, let's use those full 6 points and get you the best rate possible. But it's every individual is different. Everybody's financial situation is different. Everybody's financial goals are different, right? So that's something that we determine with the buyer through our consultation with them.
How do you do your consultations? Are you like a one-on-one? Explain to maybe the people that would like a sit down. I know that we do a lot of buyer consultations at the office, and we go through the A through Z's on what and how we need to prepare.
Right. So it's important, that we make time to sit with a borrower, whether it's over the phone, on a Zoom call, or in person. And we do all those, whatever the customer prefers, right? But I do like to have a loan application done before I meet with a customer, because taking a loan app in front of a customer and then sitting down and analyzing all the information and then presenting to them, that could take a really long time, right? And these days, everybody's got somewhere to go or somewhere to be, right? So I like to have the application done up front. I can analyze the credit report. I can review their income. I can review their debts. I can put together a game plan and different options for them, right?
Yeah.
And then we can schedule a meeting in person, over the phone, through Zoom, whatever the customer prefers, and we'll give them those options. And we'll tell them, look, if you're in this price range, this is what your payment's going to be. If you pay down this debt, we can get you qualified for more, or we can raise your credit scores by paying down some debt. If you claim more income this year on income taxes, is like for self-employed people, you might be able to qualify for more. So very important for self-employed people. Before you file taxes, before you look at homes, get with a mortgage professional, have them analyze your income, make sure you're claiming enough income to qualify. A lot of people like to take as many deductions as possible because they want to avoid Uncle Sam, right? But when they do that, then they hurt themselves when they're trying to buy a house or when they're trying to qualify for something because they can't prove income, right? So make sure you get with a loan officer before you file your tax returns. Have them prepared, then let your loan officer review them to make sure that you are claiming enough income to qualify. Or you might end up waiting a year or two before you can report proper income and qualify.
Correct.
But that's what we do, consultations, and everybody's different. There's some clients that do it online, upload all their documents. I never meet them, and we go to closing, and they're as happy as can be. Some customers want us to hold their hand, and that's great, and we will, and we'll meet with them, and we'll collect their documents in person, and we'll take copies and whatever we need to do to get the job done.
Great. And so far as El Paso, I know that, there's a lot of maybe some programs that a lot of people don't know about. And it's surprising to know that they are not offered that at all or know about those programs, or agents even being able to show them those type of programs that are out there. I know we've worked on a lot of buyers that are going on the DPA program, and the rates are even lower at that point. Can you explain a little bit with, I know rates, interest rates dipping, but how can they benefit from that DPA program?
Okay, so we have a couple down payment assistance programs, right? And be careful what you hear on social media. You're gonna see or you're gonna get a lot of information that is designed to have you click on a button or call for more information, right? And then you realize, well, that's not really the information they were presenting, right? But that's why they do that. But we do have down payment assistance programs designed to help you or the buyer with down payment, and you can use that money for down payment or closing costs. Okay. Typically, the rates are higher for those programs, but right now they're actually a little bit lower. So that may be an advantage for a buyer who wants to qualify for a little bit more. And they need a lower interest rate, which would give them a lower payment so they can qualify for a little bit more. Those are funded through the state of Texas. And they've had some recent changes to those programs where they're requiring you to have a lower DTI, and they may require reserves in some cases. One month of reserve is equal to one mortgage payment in the bank after you've paid your down payment, after you've paid your closing costs. They want to see that you have the ability to have 1, 2, or 3 months reserves in the bank in case you lose your job. You've got a month or 2 or 3 in the bank to pay your mortgage if you needed to, right? So those are a couple of small changes, but that's what my job is, right? I get your loan application, and I've already know all the programs, and I look at your overall profile, and then I make those suggestions to you. I know you as realtors, you guys know about these programs. You don't know all the ins and outs, just like I don't know a whole lot about real estate, right? And doing CMAs and how to write a contract, right? No, the basics, but that's what I do. So we closed a loan for one of your team members last week. Initially, we had him on our 100% FHA loan through CMG. That was the loan that we are offering. But halfway through the loan process, I noticed that the rates were on those programs were a little bit more enticing. So we switched them. It took us few days to switch it. We met our closing date. But in the end, the customer went from thinking they were going to come into closing with $4,000. They ended up walking out of closing with $2,200 check, which was their earnest money.
That's crazy.
And a 6.875 rate. So that was really, they were very excited about that. And I was very excited for them too. When I see those opportunities, when I know that we can get them a little bit better deal, even if we're midway through the transaction, I'll call you on it. Hey, I think we might be able to do a little bit better. Do we have time? Do you think we can get an extension to make this happen for the customer? And then we'll move according to what answer you give us. But we do have the 100% FHA program through CMG. And the benefit there is that we can do a buy down. We can use seller contributions to buy down the rate with our program. If you go through one of those DPAs that's state funded, you cannot buy down the rate. They determine what the rate is, and that's it. You cannot buy it down. But one of the benefits to their program is that there's no cost to that rate. Okay, so it just depends on your situation again.
Correct. So on the here, like I have a lot of medical people. Okay, who falls under like basically, I have a lot of them say, hey, do I qualify for the HERO program or the down payment assistance program? Teachers, law enforcement, medical. Where can you guide us and lead us into that conversation of what they would fall under?
Well, a lot of those professions will, but there's many ways to qualify for that program. You can qualify just because you're a first-time home buyer. You can qualify because you're under the median income limits. You can qualify because of your profession, like law enforcement or medical professionals, teachers. So there's many different ways to qualify for this. There are income limits on this program. Okay, so and they're pretty high. I think they're 80, 90,000, and it depends on the size of your family, but they're pretty high. So, but if you have two professionals making good income in a household, you might be over those income limits. So a great alternative to that would be our 100% FHA loan that we fund through CMG. And that doesn't have an income limit, and we can use points to buy down the rate. So, and I could sit here for hours and just give you all this information and ways to qualify, right? The best thing to do, and I can't stress this enough, is call us. Let's get an appointment. Let's get the application done. Let us review your entire profile. And then we can tell you, hey, you're going to qualify for this. You're going to qualify for that. This is your payment here. These are the better terms. And then we'll let you decide what's best for you.
Exactly. Which programs are best for you, which route to go, your payment, and so forth. So that's something that we in the team love to do is we like to get the loan application in place first. And it may take a couple of days, like Ryan advises, because they want to verify income, they want to verify employment. And I like all that stuff up front because then there's no surprises for you. And then we can shop comfortably in a sales price that goes according to your payment. So that helps us as real estate agents look up the homes in the area and that price point. So we're respecting that monthly payment for you. And of course, if we want to go higher, that's a conversation that we always do. So let's get back to the topic of mostly about the interest rates. We need to more, how can we tell the people of today, you already said it in the beginning, but I want to reemphasize it again, is where do you see interest rates going? How many times do you think the feds are going to come down with bringing that rate down? And what has to happen for those rates to continuously go down?
So they are trending downward. Okay. And we're waiting for some reports to come in to determine what rates are going to do next here in the next couple of days. In my opinion, like I told you earlier, they're going to go down. I think the Fed is expected to have 2 rate cuts this year. And I think that they're going to definitely improve, right? We don't know what that looks like. And you don't want to wait until that happens to start your journey, right? To start your process, because by the time the rates come down and you start that process, it could take you 30, 60, 90 days to find a house, close on a house. And by then, who knows what rates have done and who knows how saturated the market is, right? And who knows how much prices have gone up. So if you plan on buying a house this year, I can't stress it enough. Even if you want to buy at the end of the year, call now. Let's look at your credit. Let's give you your options. Let's make sure you're prepared to pull the trigger. But yeah, I think rates are going to come down maybe into the low sixes right now. Or last month, let's say they were probably in the sevens, right? A couple months ago, they were in the eights. Now they're in the maybe high sixes, low sevens. And again, it depends on your credit score. It depends on your loan program, down payment. There's many factors that are going to determine what rates you get and program, right? But I would say they're in the high sixes. Now, I have people calling me all the time or sending me screenshots or sending me emails. Hey, Ryan, I saw 5% here and I saw 4% over there and I saw 2% over here, right? And when you read the fine print, you start to understand how they're offering those, right? Those loans are extremely expensive. And some of the builders are giving away 6 points right now, and you can use it to buy down those interest rates. But if you're buying a resale home and the seller contributions aren't there and you don't have a wad of cash to spend on rate buy down, then you're looking in the high sixes, I'd say. And you cannot talk about interest rate without talking about cost for the rate. Okay, you may go online and get a quote from a lender, six in the fives maybe, and you don't realize that they're charging you an origination point and they're charging you 2 discount points, right? Because you don't ask, maybe you don't know to ask. But when I have a customer who says, hey, well, this bank offered me this, I say, okay, great. Get me the loan estimate. That's going to tell me everything about what that bank is offering. It's going to tell me what they're charging you to offer you that rate. And 9 times out of 10, there's multiple points, multiple fees for that interest rate. And if I were to charge those fees, usually my rates are higher. I mean, better, lower than wherever they've gotten that quote from. So it's very important to not just talk about rate, but also talk about the cost of the rate, and then shop and compare apples to apples.
So on a home buyer's side of view, how do they even know what's a good deal? Because I'm pretty sure 90%, 95% of homeowners aren't going to know what a discount point is or what an origination point is. Should they be shopping for multiple loans? What are they looking for? Just like you said, it's not just the rate, it could be the fees.
Yeah. So, as a consumer, I wouldn't entirely base my decision to work with someone based on rates and fees, although that is going to be a big component, right? That you're going to look at. But you also want to work with someone who has a lot of experience. You said it earlier in this interview that I don't know how many deals I've saved, where you guys had maybe a buyer come in who was already represented or already pre-qualified. They were going to buy one of your listings and it fell through, and I take a shot at it and I'm able to come in and save the deal. Well, that happens a lot, and is it worth a quarter point? Is it worth an eighth of a point for you to go with a lender who doesn't have the experience, who doesn't have the knowledge to get you into your house? Because remember, you're putting earnest money, you're spending money on inspections, you're spending money on an appraisal. All of this is coming out of the customer's money up front, out of their pocket, right? And if you're not working with somebody who can get your deal closed, you're at risk of losing all of that money, right? And is it worth it? Because online lender A gave you 6.99 when we offered you a 7, in my opinion, it's not worth it. So you definitely want to work with someone. Mm-hmm. Yeah, you want to work with someone who's got experience.
A good agent's going to pair with a great loan officer so that we're not having that buyer spend that monies up front and then lose it while things are barely being verified in the beginning and then they don't qualify. So sometimes we get home buyers that are already approved somewhere else, and then they end up getting denied like a week, 2 later. And we're like, what happened? Didn't they verify income, employment? Right. And so sometimes that could be disappointing. But if you have been denied before, you owe it to yourself to try again. Because Absolutely. You may be renting or your lease is almost up and you end up, you're actually maybe qualified, but this past loan officer or lender or bank or whatever ended up denying you because maybe they couldn't, think outside the box and get you approved. So, and it is pretty scary because I have seen quite a bit of deals that were denied and then now they're approved. So that just tells me, it's scary to fall in the hands of an unexperienced lender or loan
It's
officer.
dangerous. Yeah,
It's
it is
dangerous.
very dangerous.
You
Yeah.
could just miss out on home ownership altogether because of something that couldn't.
Right. And then you're discouraged. You're discouraged. You don't want to you don't want to go apply again, and you become a renter for life. You've missed out on all the equity you could have
Yeah,
had. You end up homeless, jobless. Who knows? It could get really bad. Don't do that to yourselves,
yeah,
people.
really bad. And
Surround
I
yourself with a
do.
good lender.
Yes, exactly. And the experienced, right? And a good
Yeah.
real estate agent will pair you with that partner. So again, you owe it to yourself to own, some type of wealth in life. And for me and Edgar, we believe in real estate, and real estate will
Absolutely.
always in the long run provide you generational wealth. And it only takes one. If you could lock in one piece of real estate, it's going to unfold for you for the second, the third, the fourth, and so forth. So this is a great way to create generational wealth. And again, remember, it's like I always say, your house is like your little piggy bank. So just picture it, a little piggy bank. Every time you pay your mortgage, a piece of that goes in, decreasing your principal. But meanwhile, that's happening, you're increasing, you're growing your equity in line with that. So real estate is always a great investment, and I will 1,000% preach that because I've been through it. So I want everybody to prepare for 2024. That's actually going to be the main message that I have this year: is put in the loan application, meet with the loan officer so that we could put a game plan for you. Do you want to piggyback off of that, Ryan?
Yeah, I just want to say, it costs you nothing to do the application. We don't charge an application fee. We don't charge you a credit report fee up front. If we do end up closing, there will be a fee that we disclose to you for a credit report. But initially, it only costs you maybe an hour of your time,
An
and
hour?
that's it.
Yes.
And that hour could change your life. I don't know how many people have done an application thinking they don't qualify, and they're in their home in 60 days. And it's so exciting to see that, because everybody listens to their family, they listen to the news, they think they need 20% down minimum. I mean, there's just so many myths out there, and there's so much misinformation. But if you take that step, it's not going to cost you $1 upfront, right? To find out where you stand, what you need to do to become a home owner. Don't let interest rates dictate what you're going to do. Don't let the market dictate what you're going to do. Yes, of course, it's important. It is a piece of the puzzle, but don't let that stop you from becoming a homeowner. Don't let that stop you from building that generational wealth that you've been talking about. Get the consultation, find out where you're at, and then you are going to be better equipped to make a decision for you, for your family, on when the right time is to buy a house.
Correct. And again, guys, with me and the team, is we're not after the 30-day sale. We're after the relationship that we want to build for you and the outcome of getting you in that home. So I want to stress to you, if it takes 5 months, 6 months, please don't be also embarrassed to come in and see us. I do not, and I do want to reiterate this, I do not know your financials. I do not know your income. I do not know your credit score. Everything is completely confidential with Ryan, unless I do have clients that want me to go to the loan meeting, and I go, so that I'm sitting there with them. But again, I don't know that information. There's sometimes friends and family that maybe don't want to use us because they don't want to know those, or us to know those aspects of their application. But everything is completely confidential. So we just get the sales price and what type of program you are under, and we go fight for the best deal for you out there. We want to get the most amount of money for you, the best rate, the less fees, and most importantly is find you the home that you deserve. So that's something there to kind of touch base on. Is there any questions? Feel free. I know we have a couple viewers here, but once we post the video they replay the video. If you guys have any questions here, let me see the comments really quick. Miguel wants to know when I decide what's next, how much does it cost when you buy down 1%, and is it worth it? And is it better to use my VA in this market?
Ooh, that's a good question. So VA loans are probably the best loan that you can qualify for. Of course, you have to be a veteran. You have to have your benefits, and we'll verify all of that for you, so you don't have to go through all those steps. But if you have a VA loan, you qualify for 100% financing, and the rates for VA loans are usually the most competitive.
Okay.
So, you know, instead of putting a down payment, maybe you want to use some of that money to buy down the rate. Now, I can't say that to buy down a rate half a point is going to cost you 1%. And let me kind of give you an example here. If you're buying a house for $200,000 and we're talking about a fee, a buy down of 1%, 1% is going to be $2,000 fee to buy down the interest rate, right? So I can't say that there's a set amount. If you pay 1%, that you're going to get an interest rate lower by half a point. We'd have to know what your credit is. We'd have to look at a couple of different factors, and then I can give you those options. Once I know your credit, I can price your loan, and I can say, hey, you qualify right now for a 6.5, and it's going to cost you 2 points to get to a 5.5, or whatever the case may be.
And that's a great question, like you mentioned, because we could even get those funds also from a builder right now, where they're offering, you know, money to bring down that rate for you, Miguel. And you know, the great thing about the Veteran Affair loans here, the VAs, is that you come in with zero down, so you have no payment and you have no private mortgage insurance. I mean, also, if you have any type of disabilities, on like any disability exemptions, then that could be taken off of your taxes as well. So the VA program is always an amazing program for our veterans.
Absolutely amazing. So you're talking about disability rating. You know, if you have 100% disability rating, you're not going to pay property taxes, and that's huge. That's, you know, that on a $300,000 home, that could be $700-800 a month that you're going to save,
Yes.
which means you're going to have a lower payment, or you can go out there and buy a $400,000 home if you'd like, right? Depending on your budget and everything. VA is absolutely the best way to go. Yeah.
That's pretty cool. You know, I had a friend too that was that had a primary on a VA, but then his family grew, so he was able to buy another home on a VA. Kept that VA on the primary and then moved to another home on VA. How was that done? I don't even remember that question. How
Yeah,
that
you can
scenario
do
went.
that. You can do that. So all we need is a lease agreement to offset your mortgage payment, show that you're collecting rent, to make the payment on the current VA loan that you have, so we don't have to hit you for both payments, right? And you have bonus entitlement, okay? And we have to figure that out on our end. It's going to be a combination of what you owe on your current VA loan, and we got to do some math, and we got to tell you what your bonus entitlement is. And usually it's 300,000-400,000. But again, we have to do the math and see what you have out on your benefits currently. So, but yes, the answer is yes. If you have a VA loan and your family has grown, you work on the other side of town, and living on the east side is not convenient anymore, or, you know, there's several different reasons. But yeah, you can buy another house using your VA benefits if you have that bonus entitlement. Very good question.
Yeah, that's actually a really great answer. And I do want to hit one more question before we probably wrap it up. But okay, so yes, 2024, I get a lot of people asking me too, is it still a great time for me to put my home on the market and get, you know, some good return? And the answer is yes. In all actuality, the market, we have to come into realistic terms too, that a lot of the time we had inflated prices, right? Everything was like overpriced. But now we have still that equity that was significantly gained when COVID happened. So that equity hasn't been lost. Now we're probably going to go up this year another 1% or even 2%, which is still ideally good because we're not expecting home prices to plummet or take a huge decrease. So, is it a great time to sell? Yes, you're still going to gain the most amount of money if we list it at the realistic price. With that monies, you can still grab it and put it down as a down payment or bringing down that rate for your new home. So that's an option for you because I know a lot of sellers, the reason for low inventory is because a majority of them didn't want to sell their home because they were in the 2s and the 3% interest rates. For goodness sakes, I wouldn't even want to sell if I was in the 2 to 3 interest rates. But I know that there's a solution for those sellers that want to keep that loan at 2 to 3% and buy. Can they rent that house and keep it and purchase another home?
Yes. So if they currently have an FHA loan, they cannot buy another house using their FHA financing. So what I would suggest there is that we refinance that FHA loan into a conventional loan, and then we can use FHA financing again. And we can use a lease agreement to offset the payment, kind of like in a VA loan. Now, there are certain criteria you have to meet in order to do that, but that's what we would look into doing. If you have a conventional loan and you want to buy another house as your primary, you can do that as well. Now, it has to make sense. If you have a $300,000 home and you're and you have 4 or 5 people in your family, and you're saying, hey, I want to go buy this $100,000 home over here that's got 2 bedrooms. Well, it's probably not going to make a lot of sense to an underwriter, right? Kind of looks like an investment property. But if you're legitimately buying a house because you need an upgrade, because you've been at this house for 20 years and you want to live in a different area, or it's bigger or whatever, yeah, we can definitely keep that house, rent it out, use the rental income to offset the payment to qualify, and get you into your new house with the primary home minimum down payment, which is 3.5% for FHA and 5% for conventional. Now, there are also 3% options for conventional. We also have down payment assistance programs for conventional loans. So if I were to talk about every program that we have, I'd be here the rest of the day.
I'll be here till tonight.
Yeah. So
another one.
Yeah, and that's why I like to get the application done and talk to you about loan programs that you're going to qualify for, that are going to mean something to you.
I wanted to yes, I just wanted to briefly let people know like the surface of what is a possibility, because that's the problem that we have as real estate agents is the inventory is low because sellers don't want to give up that house at 2 to 3%, the 2 to 3% rate they have to go into another home that's at a 7-8%. So there are ways they could do it. Of course, we're not going to gain inventory by renting it and then buying, but just in case, I feel that the values of the homes are set at a balanced market value right now, and you're going to be okay. So it's a win-win for buyer seller 2024. That's how I see it.
Yeah. And, I want to stress this again, Jackie, for everybody who's listening or who will see this video in the next couple of days or weeks. The market is going to change this year. Okay. And it's going to get ultra competitive the way it was a couple of years ago. That is going to happen. If you're a buyer and you've been on the fence waiting for rates to come down, waiting for this to happen, you could end up waiting a long time if you miss this boat. If you don't act now, you could end up waiting years for the right scenario, because when the rates go down, there's going to be a huge influx of buyers already pre-qualified who have been waiting for this to happen, and they're going to flood the market. And, basic supply and demand law will apply here, right? Low supply what is it? Low supply and high demand is going to be more expensive. And, we just saw something about this in the news the other day, right? With Stanley Cups, right? You used to be able to buy one for $40. And now you got to go online and find someone and selling it for 3, 4, 5 times what you'd find it for at the store. And that's supply and demand. And when we don't have enough inventory, enough houses for sale in the El Paso market, and we have way too many buyers, that same thing is going to happen. And people are going to regret not acting this year.
It's going to regret. Yes. And again, I don't think we preach what we haven't done. Like I'm in interest rates right now at 11%.
Yeah, and let's touch on that. You're a real estate expert, yes, right? And I know a lot of people have been doing real estate for a long time. And I'll tell you what, right now I'm doing more investment property loans than I have in the last couple of years. Why do you think that is? Because these professionals, they know what's going on. They know right now is the time to scoop up this property. They're buying it. And, people can buy it with the primary, as their primary residence with rates in the 6s, 7s, right? Investors are buying them. And you know this firsthand in the 8, 9, 10%. Some people are using hard money at 12%, and they're still buying these properties. So that should give you some indication of, what are these professionals doing? They must know something that I don't know. And I need to be doing the same, right?
Well, Ryan told me that I could buy more houses, and I got in trouble already by Edgar, and I'm in big trouble, and so I got to take a pause. But when I find a good deal, I pass it to either family or friends. But if they don't want to jump on it, I'm like, okay, guys, it's your loss. Like, I'm just trying to guide you and lead you to lock in this real estate and hold on to it.
And what has that done for you? Your whole portfolio, Jackie, you have a very, very good portfolio at this point. You have not let the market scare you. You have not let the market dictate what you're going to do. You have a game plan. You have a vision for yourself. You have a vision for your family. You have a vision for your business, right? And no one's going to deter you. No one's going to determine what you're doing. You're going to be steadfast in what you're doing, and you're not going to be scared. And it has worked out very well for you over the last couple of years, right?
It has, and I want the same for everybody else. So don't be scared, okay?
Don't be scared.
Get in there. Right. Get in there. And if I could give you any advice, is just lock in the real estate. If you can afford it, if Ryan says you can afford it, then go lock in the real estate. Maybe you need to just bring down your Starbucks or bring down the grocery bill going out and eating. We tend to eat out.
One Stanley Cup instead of the whole collection, right?
Don't waste no more on Stanley Cups. Like, limit the vacations, right? You want to do some stuff, some give up some pain to gain the most important part. But I think we had a very, very great podcast. I don't know if you want to end this podcast with anything else, and we'll wrap it up, Ryan.
Well, you can find me on social media. Look me up. You can find me on Jackie's Friends List too. But you can message me. You can email me. You can call me. We'll send you the loan application. You can get in touch with Jackie. She can send you my loan application. Once I get the application, I'm going to give you a call. I'm going to introduce myself to you. We'll go over a few things, and then I will run your application and let you give you a call back to go over your options. So don't be scared. Right now is the time to act. Don't listen to your aunt or your whoever bought a house 20 years ago telling you it's impossible right now. It's not. And it is the best time. The best time is now. And it's always now. And in 6 months, that's going to be the best time. And in 2 years, that's going to be the best time, right? Because we can't go back in time and buy 2 years ago. So now is always the best time to buy.
Yes.
Contact Jackie, contact me. Let's get you into a house in 2024.
Let's do it, guys. Pair yourself with a knowledgeable real estate, because that's what you need by your side right now. A knowledgeable, experienced real estate agent paired with a great lender, so that you could get the most accurate information, close to accurate information possible. A good agent is always an educated agent and knows where to steer and put you in the best circumstances. So thank you guys so much for joining in. I know we went a little bit.
Been fun.
Of course. And I can't wait for the next one, guys. So we're going to keep these rolling for you. Thank you, Ryan, so much. Have a blessed Thursday. And I'll talk to you all soon. Bye-bye.
All right. Have a great day.